Thank you, everyone. We have a few names to look at right now in terms of who is coming through. We appreciate our speakers, but we also appreciate the fact that we have joining us for this very important curtain raiser event for the Nigerian Exchange Limited, the Group CEO of the Nigerian Exchange Group, Mr. Oscar Onyema. Thank you very much, Mr. Onyema, for being with us. We also have the CEO in the room, the CEO of NGX Regulation, Ms. Tino Adiawe. Thank you very much for being here as well as the acting CEO of the NGX Real Estate, Gabriel Igbeka. Thank you. We also appreciate your coming through. And of course, Kato Mukuru, the Managing Director, Head of Frontier Markets Research at EFG Hermes Research. You're here to support Simon in his presentation and to bring further robust insight into what Simon will be speaking to us in terms of the global perspectives. Let's get that picture in. So Simon is leading this particular event in terms of raising the curtain, globally speaking. They'll begin to bring it all home to Nigerian market, what the market has been, what the opportunities are, and what to be on the lookout for. I'm sure everyone knows that Nigeria will be going for a major transitional election exactly 30 days from now, February the 25th. So the role of the capital market in being that enabler and a very veritable platform to support the new administration that comes in on the 1st of June will be very, very critical. So we'll see a whole lot and hear more on this during this particular 1 hour event. Let me just say very quickly to all our participants and delegates that we have the Q&A button. You can see the button there at the bottom of the device you're using. And you can please put in your questions if you're putting that specifically to Simon, who is our lead speaker, or you're putting that across to Temiko Kuala, who is the CEO of the Nigerian Exchange Limited, or any of the other members of the NGX team, as well as Kato Mukuru, who is also from EFG Hermes. You can do that, or you can send a general question. We'd like to take that and your comments. Remember, if you've registered for this particular event, we'll be sending you the materials presented by both Simon and Temi via email, so you can be rest assured of that. Thank you. And now I think we need to get started to save time and call on Simon Kitchen, who is the head of strategy, managing director and head of strategy at EFG Hermes Research, to raise the curtain on this NGX Look Back, Look Forward 2022-2023 market briefing. Simon, you have the floor. Good morning.
Good morning, and thank you very much for that generous introduction. Good morning, ladies and gentlemen. Just bear with me. I'm going to share my screen with you. I hope you can see this now. So I'm going to take you through our view on global markets and Nigeria for 2023. Just a brief word of introduction. EFG Hermes is a leading investment bank specializing in frontier and smaller emerging markets. We've been active in Nigeria for coming on for 5 years now. I myself have been looking at Nigeria for around the same period of time, but my background is in Middle Eastern markets. I'm joined by 3 vastly more experienced colleagues today. Kato Mukuru has already been introduced, our head of frontier research. We've also got Ronak Gadia, who specializes in banks in the Frontier University, leads our coverage on Nigerian and other sub-Saharan banks, as well as European banks. And we have Sarah Maha, who's a senior trader with EFG Hermes, who's been looking at African markets for many years, and before EFG was living and working in Nigeria. So first of all, my job today is really to give you some context, how we stand with global markets in 2023 and what that means for Nigeria. As you're all well aware, 2022 was a rough year for global markets, and I think that the key point here is that liquidity in global financial markets, not just in Nigeria but across the globe, has been tightening. So I'm going to talk you through our view with a few slides. These will be shared with you after the event today, and please get in touch with us if you have any questions either now or later in the day. So this is I'm starting with a chart. There's quite a few charts in here. The point here is If you look at global liquidity, and a way of measuring that is to take the Fed balance sheet, the US Federal Reserve System balance sheet, and then the reserves of all other central banks in the world. If you look at that combined balance sheet as a source of liquidity for the global financial system, you can see that it has been shrinking at its fastest rate since the 1980s. Why is that? Well, for one thing, as you know, the Fed expanded its balance sheet after the financial crisis in 2007, 2008. In the past few years, it has been running down that balance sheet. That process continues as it raises rates. At the same time, global central banks, particularly those in emerging markets, have been squeezed. They've been running down reserves, particularly with the commodity price shock that you had in 2022. Sorry, just bear with me, a small technical issue. Are you still able to see my screen?
Yes.
Okay,
yes,
that's
Simon.
good. I'll carry on. So, yes, central banks, particularly in emerging markets, they've also seen their reserves run down because of the commodity price shock. They're spending more on oil imports, food imports, and so on. If you look, for example, at the FX reserves of China, they've fallen from a peak of $4 trillion to around $3 trillion today. So that's a squeeze on overall liquidity, and that's affected the performance of global financial markets. So in the chart I'm sharing with you, you can see that until recently, the emerging markets index has been falling at a fairly rapid rate. It's just begun to recover.
Okay, go ahead, Simon.
Sorry, I'm just, I need to reshare my screen.
Yes, it's okay.
There are gremlins. Can you see that again now?
Yes, you're back on the block, Simon.
That's great. Okay, apologies. So the liquidity environment has been challenging in a number of markets. What has that meant? That's meant that markets have become cheaper. So what I'm doing here, I've got a scatter chart showing the price to earnings multiple for a number of aggregates. So you've got emerging markets, frontier markets, Africa, ex-South Africa, and then some individual exchanges. And I'm plotting that against the earnings growth outlook. So Nigeria looks fairly cheap on this basis at around 10 times 2022 earnings growth of 50% plus. But it's not the only one that's cheap. Egypt also looks cheap. Turkey down below at a lower multiple, similar levels of growth. You've got Kazakhstan as well. China's quite a bit more expensive, which you'd expect for a market of that size. But many markets are cheap, and I think it's interesting that Nigeria last year and in 2021 missed out on a rally driven by rising oil prices. So if you look, for example, at the big oil exporters in the Gulf, Saudi Arabia, UAE, Kuwait, Qatar, those markets were very strong in the past 2 years. As oil prices rose, that liquidity fed into local markets. We didn't see that in Nigeria. As you all know, there was a failure of the high oil price to translate into sort of financial windfall for Nigeria. And that, I think, is why Nigerian stocks remain fairly cheap. So yes, there is a valuation opportunity in Nigeria, but it's not a unique one. So as I say, we've seen a bit of a recovery in the past few months. Why is that? Well, for one thing, I think China The authorities there took some difficult decisions right at the end of 2022 to move away from their zero COVID policy. That was very successful in early 2020, but you saw in 2022 that it was remaining very disruptive, and political pressure on the Chinese government began to build towards the end of last year. They shifted their policy. They are now allowing people to move around more freely in China. Obviously, that's had an effect on COVID cases, but also it has now opened the door to a more normal level of economic activity in China. It will be bumpy, but I think that the levels of economic activity in China will be higher in 2023 than they were last year. And given the size of the Chinese economy, that's good for the global economy, and it's good for emerging market stocks. So you can see this chart I'm sharing with you that the green line is the MSCI EM index, which China is a third of. That's risen sharply since the lows in October, and flows into emerging market tracking ETFs have risen very sharply as well. So they're again spiking up. The average flow is running at around $400 million a day at the moment. There's also some factors elsewhere in the world. So I think that in Europe, for example, there's some optimism that the hit from high energy prices and from the war has been less severe than expected. Yes, everyone's expecting a recession in the US, but I think there's maybe some optimism there that might be a mild recession. Certainly expectations, I think, are better now than they were 6 months ago. So we've seen a recovery in money going into emerging market funds. That's good for emerging markets. What about frontier markets? So Nigeria fits within the category of frontier markets from the point of MSCI, which is the leading index provider. We look at a basket of frontier specialist funds, and they've had a rough few years. Frontier markets have fell a little bit out of fashion. What we saw, though, in the last couple of months has been some very strong flows into the frontier market specialist ETF, which is run by BlackRock's Operation iShares. So just in the last 2 months, you've seen $240 million of inflows into that ETF, and I think that's driven by the fact that as I said before, valuations are pretty low. There's an opportunity in frontier markets as there is in emerging markets, and the flows into that ETF reflect that. However, Nigeria isn't benefiting from this flow into the iShares fund. I've got two pie charts for you on this slide. The one on the left-hand side shows you what this ETF owns by country. So the biggest country is Vietnam, VN, with around a third of that ETF being allocated to Vietnam. 4% of that ETF is allocated to Nigeria. So that's the ETF as it currently stands. But unfortunately, because of FX concerns in Nigeria and some other markets, Egypt, Bangladesh, Kenya, because of difficulties in getting foreign exchange out of those countries, any new flows into that frontier ETF that is now one of the largest vehicles for investment in frontier markets, Nigeria is not getting a single dollar. And so this speaks to a broader point about Nigeria, is that the valuation opportunity is clear. The broader sort of demographic opportunity, given the size of the Nigerian economy, the size of the Nigerian population, that also is clear. but actual investment flows into Nigeria are held back by the overvalued naira and the fact that foreign portfolio investors cannot get money out of the country. Nigeria is not alone in this situation. As I say, Egypt, Bangladesh, and Kenya are also not seeing fresh flows of money from this iShares ETF because of this issue. But it is a longer standing issue in Nigeria than it is in these other markets. As you may know, MSCI, the index provider, has been considering whether to remove Nigeria from its frontier index for some months. It deferred a decision on that until June this year, June 2023. So really, among the many pending items for the incoming government to deal with in the first half of 2023, one is the currency. Solving the current currency problem could prevent Nigeria being removed from the frontier index, and over time create more of a flow into the Nigerian stock exchange from foreign investors. Right now, those flows are obviously quite limited. What I'm showing you now is what frontier funds, this is a sample of 25 frontier funds with total AUM of $3.5 billion. What do they own in Nigeria today? Well, right now, Nigeria is just over 1% of their portfolio. 5 years ago, it was 6%. They are below the benchmark weight of 2.7%. And again, I think this largely comes down to the FX issue. The fall in the Naira since 2018 has contributed to the fall in portfolio weight of Nigeria. But really, this is about outflows. This is about foreigners pulling money out of Nigeria because they're unhappy with the sort of current policy environment. Again, there's a clear opportunity for an incoming Nigerian administration to change the incentives for these investors and pull foreign money back into the market. Let's look quickly at local investors. You'll all be aware of the importance of the Nigerian pension system as a potential source of liquidity for the Nigerian stock market. It's one of the more developed pension systems that we look at in frontier markets. Morocco is probably the most advanced. Kenya also has a pension system, is under development. Egypt has nothing. A number of frontier markets have nothing in the way of a properly funded pension system. So Nigeria is quite developed in this respect. Unfortunately, the incentives are tilted against equity investment. And so it has to be a really compelling case for the Nigerian PFAs to put money into Nigerian stocks. This chart shows you the equity allocation relative to the T-bill yield. When T-bill yields collapsed in late 2020, there was a large increase in flow from these pension funds into Nigerian stocks. It came ahead of a dividend season as well, but when T-bill rates are zero, there's an enormous incentive to go into stocks. Now, with the recovery in T-bill yields in the past couple of years, I think there's less interest from PFAs in taking a long-term view and putting money into stocks. Why go into stocks for yield when you can get 14% on your local currency T-bills? Now, T-bills, as you know, have fallen back in recent weeks into single digits. We're also entering dividend season. So I think we may see some fresh interest from PFAs in Nigerian stocks over the next few months, notwithstanding the election uncertainty. But I think for the allocation to go back to where it was, let's say 10 years ago, when these funds owned around between 10 and 15% of their portfolio was in stocks. I think you need to change the incentives for these PFAs, encourage them to look less at the short-term nominal return and really focus on what is the potential long-run real return from investing in equities. There's no secret, I think, about what Nigeria needs to do. I've mentioned FX a couple of times. This is a widening spread between the parallel and the official exchange rate. It's welcome, of course, that the official rate has weakened in the past year, but there's a lot more to be done. Again, there's a clear opportunity for an incoming administration to fix the FX problem, and in so doing catalyze investment flows from foreigners back into stocks and also back into fixed income. I think a key point is it's not enough just to devalue. You've got to have some other policies to enhance credibility. We've seen this in any number of countries that you can devalue in a crisis, but what you need to do is hard work, maybe on the fiscal side, so that people have more confidence in your currency. So that's a real challenge in the first half of this year. What to do now? Final slide from me is, I think really for portfolio investors, you should keep a close eye on yield. Dividend season is approaching. You have some good double-digit yields available in Nigerian equities. They've come down from the highs we saw a year ago, but still pretty generous yields available. I would focus particularly on stocks where you've got a decent chance of yield growth as well. You're entering a fairly disruptive period. The macro dislocation that may come in the next few months could affect the sustainability of dividend yields. So we would recommend at the moment Guarantee Bank and also MTN Nigeria as sources of relatively high yield, but also with fairly good visibility on yield growth over the next couple of years. That's the end of my presentation. I think we're going to have Q&A towards the end.
Thank you so much, Simon.
You're most welcome.
Thank you so much, Simon. Thank you. On behalf of all the participants in the Nigerian Exchange Limited, this is a very robust presentation. Thank you so much, Simon Kitchen, the Managing Director and Head of Strategy at for EFG Hermes Research. Thank you so much. This is great, and it just straight to the point, and you just speak to the numbers, you give us some outlook, and giving us a drill down of the global perspective is particular for emerging and frontier markets. Thank you very much. Quite a whole lot of points to pick up on the fiscal side and the monetary side, and for those who want to do valuations looking at the market. So thank you so much. We appreciate this presentation. Simon, hang around, Simon. Coffee from the kitchen. If you want to refill, do that very quickly. I've got one here. So, and then we'll take a very straight presentation now from the Chief Executive Officer of the Nigerian Exchange Limited, Temi Pokuola. But I also want to quickly recognize that we have quite a number of the board members of the Nigerian Exchange Limited that have joined us to be part of this presentation. We thank all of you for making the time this morning to be part of this annual event of the NGX Look Back 2022 and the outlook for the new year 2023. Temi Pokuola, the CEO, Nigerian Exchange Limited, you have the floor for your briefing. Thank you so much.
Thank you very much, Bosun. Good morning to you again, and good morning to everybody. I would like to stand on all the protocols that you have established. Just to also mention that we have directors across the group from our entire NGX Group family. So I do want to recognize and thank everybody for joining us You had earlier recognized the CEOs of the FTX Group PLC, Egypt, regulation, and real estate. So thank you so much. Simon, thank you for the presentation. What I would do in what looks like about maybe 15 minutes top, so that we can have another 15 minutes for Q&A, is to do three things while I also share my screen very quickly. I've been looking to essentially get us, I think, what I would call informed on three areas. So by the time I'm done speaking, I hope that I can present to you just key facts and data about the exchange for 2022. So for example, most of our key indices, most of our products, how did they perform? The second thing that I would like to do also is to give you what looks like a scorecard of sorts for the exchange in 2022. So just with that backward-looking lens, what drove a lot of the activity that we saw, what was some of the key wins that we had. And then finally, most excitingly for me, we'll just take a peek into 2023 and to discuss initiatives that we are looking to execute around with key stakeholders, with our board, with stakeholders, with the regulator and the like. Bosun, let me request if we can go on mute. I think there's a bit of feedback if it's your reverbing. Thank you so much. So very quickly, let me go. I think Simon did a very good job with a lot of the economic indices and stats. So I will skip those on my presentation, but nonetheless, they'll be available for those who would need them when we are done. I want to start with this slide. This is slide 10. And what I try to present here, can you confirm please that you can hear me okay?
Yes, Tom.
Okay, thank you very much. So this slide just tries to situate NGX, our exchange, with global averages. And this point, I think, had been made before the performance that we had for 2021. I usually say to people that it's difficult to take credit when the markets are up, because then when they go down, you obviously also have to own that. But I think for the benefit of what we went through all of last year, both as an exchange, as a country, it's quite good to see that when you compare our exchange with exchanges globally, you would find that it was quite a good year for those who were invested. Almost a 20% like return. Global averages, I think, suffered quite a bit on the back of global recessionary fears and interest rate hikes. Across the continent, we saw very strong performance out of Egypt in particular. One of the things that drove this performance in Egypt is because that they had gone, I think, quite aggressively with the reforms that they needed to do. On our side, on the right side there, I try to put a couple, I think, of some of the drivers of this performance that we saw here. Simon spoke earlier about dividend yields. Last year, our market offered some of the best equity-like dividend yields that you could find. So by the time you factor that into some of this capital appreciation, I think we can see why this performance occurred. The other bit, of course, is what I call repatriation trades. We saw the benefits of our exchange having what I would call dual listed stocks, particularly with the London Exchange. So we saw quite a lot of trading activity as people look to either take advantage of arbitrage opportunities or to use that as a mechanism for repatriating capital. Still speaking about data, here is what generally the turnover that we had in 2022 was. On the left side there, you would see that we had very strong, decent growth year on year in the market turnover for the year 2022 versus 2021. And the driver of that, if you look on this right side, you see this light green bar chart and you see the decline there. This is the percentage holdings of foreigners in the Nigerian capital markets. And what we see is that thick green line where you see this growth by local investors. I think it's a good time for me to thank every single one of our intermediaries, of our investors, of our stakeholders that really did show that the local market has depth. That the local market, when the right opportunities present themselves, they would actually put capital to work. So this really helps to ensure that our markets were stable, even with a lot of the repatriation and outflow of capital that we saw. So for 2022, this is what the growth in the equity market was. And on the fixed income side as well, we saw what I call a bit of a modest growth in the turnover and also the market capitalization of the securities that were listed. The other asset class that we trade is ETFs. What you find here is that from 2021 to 2022, it was also a decent growth. You see this decline here from 2022, where we had about 24 billion naira worth. The big driver of this is the new gold ETF, where again, back to some of the FX repatriation challenges, many of the transactions and business in that asset class also was missing. Let me speak then very quickly. As I said earlier, the second key thrust of my presentation is to give you a bit of a scorecard as to activities from last year. One of the things that I am most excited about is just the types of listings that we had in 2022. I give a very quick snapshot here of some of those. BUA Foods were listed at 720 billion. It also drove some of this market performance that we had. That stock today has grown to over 1 trillion naira worth of market cap. Late in the year as well, we had a listing of Geregu Power. I think we spoke about this also at length at the time, the first generation company to be listed on the exchange. That also gave us a lot of excitement. And I think one data from all of this is that in 2022, these listings added about 5 to 7% worth of new market cap to our business. But I think more importantly, as I will show later on in the presentation, when I look at the driver of that 1 and change trillion naira worth of trading, all of the new listings that we had, if we also include MTN, which is from December 2021, accounted for about 15% of the trading activity. And this point is very important because it shows that you do need this origination of listings. If they're quality companies, investors will follow suit. On the right side there, you see also some of the strategic fixed income offerings that we had in 2022. I am particularly excited about the Lagos Free Zone listing, not just because this was one of the longest dated corporate bonds that we've had in the history of the Nigerian capital markets, but I think also because we're doing a lot of work with the free zone area. You will see that there's a lot of, even from the national level, attention in that area. I think per square meter, no other area in Nigeria has attracted, more investments. And so we're trying to ask how we can obviously work with our regulators, with stakeholders to facilitate more capital flows into this segment and into this area. Some of our laws around CAMA laws, some of them need a little bit of work to facilitate that. So we're quite excited to see that of all the fixed income listings that we had, we were able to bring this free zone listing to the exchange. The final point on the scorecard for 2022, what I tried to present here are a few other perhaps key important points. We launched the derivatives in about April last year. I think that this product does show that I think a lot of the successes that we have had really has been on the back of work and efforts and sacrifices that people have laid for several years. So I do want to thank, I think in particular, Oscar, the group CEO, for a lot of that foundation. So we're able to finally launch derivatives last year. We've spoken about this quite a bit. We do think that this is one of those sort of medium to long-term strategic initiatives that should help deepen the Nigerian capital markets, both from a risk management standpoint and also from a returns perspective. The technology board, this is an initiative that we've worked quite, I think, aggressively on. We're extremely grateful to the SEC that in 2022, they approved the rules for the technology board, and we're hoping to then, execute on that this year. Very quickly, what are we trying to do with the technology board? It is an understanding that our rules, as they're currently set up, are not necessarily favorable to technology companies. Tech companies tend to have a different sort of approach to them. And so this tech board is essentially a separated board where we do try to take a look at our rules and try to make them fit for purpose to make us more attractive to technology companies. So we got that done in 2022. In 2022 as well, we launched the AELP, that's the African Exchanges Linkage Program. Again, another multi-year effort that successfully across the continent we're able to bring that to bear. The final thing I'll touch on here is what I call strategic partnerships. we announced a few key strategic partnerships in 2022 with the Bank of Industry, with the Dubai financial markets. When I think of the partnership potential with Dubai, for example, it's everything from a traditional dual listed potential opportunities, but more importantly, we're trying to ask ourselves, can we add more value to our existing listed corporates, whereby there might be a world where there's a sort of accelerated track to listings on a few other markets, subject to a few metrics being met. The third and final part, so this part also just speaks about some of the capacity building things that we did during the course of 2022. A lot of initiatives around securities lending, around market making, several webinars on Islamic finance, on margin, and the like. Let me speak finally about 2023 outlook. I want to stay away from the politics. I think one, because of course, Simon has spoken about it, and also because we're not necessarily political analysts at the exchange. But this is what the political landscape looks like of the key contenders. On the right, we put what I see, what we see as the top 5 issues that the new administration needs to look into and to resolve. I will not spend too much time on this because quite a lot has been said on this, both here and by a few other sources. On our side as NGX, let me go very quickly because of time to what I call the core initiatives for us in 2023. So what will keep us busy? It's a few things. First and foremost, the exchange will be looking to position itself as a platform of support for the new administration. When we look at our nation, some of the key challenges that are facing the nation are things that you can solve working with the exchange. So we talk, for example, about tax receipts. We say that tax receipts in Nigeria to GDP is about 6%, one of the lowest in the world. Well, if you situate things properly with the capital markets can actually help you enforce that because of some of the regulatory and sort of statutory nets that we have, through the markets. You talk about, for example, the new administration will be faced with challenges around liquidity, around sources of revenue, around sources of capital, perhaps from assets that are stale or that could be monetized. So I think at the heart of what we'll be looking to do in 2023 is this left bottom bucket here, where we'll be presenting the exchange as a mechanism for getting this done. Second of all, we would be looking back at listings. I spoke earlier at the fact that because of some of the listings we had in 2022, we saw knock-on effects on our trading. The new listings we've had in the last 18 months have been responsible for 15% of the trading in 2022. So how do we get more listings to the exchange? Of course, this is an age-old question, and we will continue to do our bit to try to address this. A few things that we'll be doing, things around advocacy. I spoke about the free zone earlier. What we find is there are many companies in that zone that could do with listings, but we need to sort of create the right environment for that to happen. We spoke about the technology board earlier as well. Now that we have the approval from the SEC, we would be looking to work with many of the companies and startups in that sector to drive listings there. Very soon you will hear announcements from us of the Technology Advisory Committee. We're looking to really situate a think tank of sort of many of the VCs, many of the founders, many of the well-known people within the technology ecosystem to really, really take a push at trying to use the capital market as a basis to drive listings. And then, of course, there are lots of companies in the pipeline. I think for confidential reasons, I can't really disclose, but we do hope that we can bring 1, 2, 3 of these very big ticket listings also to the exchange, similar to what we have seen in the past. The other thing that we're going to try to do in 2023 is around trading. How do we deepen the trading activity on the exchange? Let me go very quickly back to slide 11. And on this slide, I said earlier, this slide actually is one of the things that excites me the most. So if you can get this declining light green line to change trajectory, for example, in 2023, in other words, can we as the exchange also working with stakeholders, get more foreigners back into the market in the event that the environment is a lot more conducive? We're going to spend quite a bit of energy on that because then this trajectory should pick up materially. The second bit there is around retail. A lot of this growth in this thick green line that's by local investors has tended to be more institutional. So we're also, again, going to try to approach ability for easier retail trading in our markets. What are some of the ways that we will do this? We've spoken quite at length about margin lending. We're working with the CIS, with Ashon, with several stakeholders to continue to try to find a mechanism for margin trading to be possible in Nigeria. When you can do that, you would get more retail investors into the market. The other thing that we're trying to do there is really back to technology. Today, it's extremely easy for you to do banking transactions, extremely easy for you to open new bank accounts. How do we get the capital markets closer to that for the retail investors? There's a statistic that I quote quite often. In 2021, the amount of money back and forth, the velocity, if you want to call it that, between people moving money amongst themselves was 330 trillion naira in Nigeria, 330 trillion. But the capital market was only able to attract 1 trillion of that, at least on the equity side. So how do you change that? There's got to be a technology-like, solution to that. And of course, a lot of investor education needs to happen. One of the things I'm excited about in 2023 is the work we're trying to do with 1 or 2 telcos. Can we improve our data dissemination to retail investors? For example, can we, just like the banks, use USSDs as a way to either spread data or potentially one day a means for investors to open trading accounts? Let me jump very quickly back to that slide. And just look to round up very quickly. The third thing that we've been looking to do this year and to deepen is new products. We really are trying to bring to the market this bottom right portion here, particularly things like non-depository receipts. One of the things we've had clients and investors talk about is how we can position the exchange as a place to hedge currency exposure. Several markets across the world have mechanisms for this, and we've been looking to get that done on our side. Let me speak very quickly about partnerships. This year, we're also going to be looking to then deepen some of these partnerships. One that I'm excited about is the partnership with PAPS and with Afrexim. NGX is taking a very strong lead across the continent to really ask how we can facilitate intra-Africa capital markets trading through PAPS. The technology exists now. AELP also has solved that, integration. But the big headache is really the convertibility of these currencies. If you buy shares using local currency in Nigeria versus another country, how do you settle that? We're looking to really solve a big part of that problem with Afrexim, with PAPS this year, and I expect that we'll hear announcements and see some action in that regard very soon. Finally, let me speak about sustainability. This year, we do think that not only is sustainability the right direction to go, it's actually increasingly a profitable direction to go into. Several exchanges globally are talking about carbon credits trading, for example, as a means to make revenues. We don't think we're quite there yet. But this year, we'll be exploring perhaps some sort of a certification program around sustainability backed by the NGX. We think that if we can get this sort of program, it also will support many of our listed corporates, many of our entities who also then will be looking to tap global capital. So let me pause here. There's so much that we can talk about as to what is ahead of us in 2023. But in the event that I don't get the floor again, I really want to thank very much every single person that is involved with this capital markets. It's been sort of trying times for every single one of us, but we do think that as the nation continues to evolve, we're also quite excited as to the possibilities and the options available to the capital markets this year. Thank you very much, Bosin. Over to you.
Oh, thank you so much, Tim Kukwala. We appreciate that very robust presentations within the time. Now we're really short for time. We want to take a couple of questions. I'm just going to go straight to the Q&A. I will try not to backref your presentation, Timmy, as well as Simon. Thank you so much. I'm going to ask both of you to be on standby. Quite a couple of questions coming through the box, as it were. So I'm going to start with I think this goes to Temi. I'm just going to ask you very quickly for Emiliano from Bloomberg. Emiliano wants to know what's a bit of the specifics, the Temi that you spoke about to bring back the foreign investors as the reason that made them to leave initially were macroeconomic in nature and outside the control of the
Yes,
NGX. Would you want to check that very quickly, Temi?
I'm happy to.
How would you approach this? So let's take that very quickly.
Okay, thank you very much. And thank you, Mr. Onu, for the question. You are absolutely correct. The key driver, and I think Mr. Kitchen spoke to this earlier, was the macroeconomic picture. And this drove foreign capital away from Nigeria. So you're right, for a big part of resolving that is still largely outside the control of the exchange. However, what are the things within the control of the exchange? For example, one of the things that happened with this outflow of foreign investors also was a reduction in the coverage of foreign markets for our market. So when you look at firms like EFG that have a very strong sort of focus on frontier markets, many of these intermediaries actually have left our industry, whether they've lost personnel or because those firms also have shut down their businesses. So NGX has to take a very strong lead in this sort of marketing effort. So the assumption is that if the macro picture changes, the foreign capital may not necessarily flow through. When Mr. Kitchen spoke, he said that Nigeria is not a unicorn in being cheap. So somebody needs to sell that story to these investors. Somebody needs to put that together. So that's a big part of what we think NGX will be able to do. And then, of course, foreign investors are looking for good companies to put capital into. They're looking for differentiated products to put capital into. We do think that the exchange will be able to support that. So, Mr. Ono, I hope I've addressed that to the best of my ability. Thank you.
Thank you, Temi. Simon, you've got a question to you from David Whitehouse of the Africa Report magazine. And the question is for Simon, do you have a view on how high do you think Nigeria's interest rate will have to go? The central bank monetary policy yesterday raised 100 basis points to 17.50%. How much higher do you think interest rate will go? And how long do you think they will stay there until Nigeria can get inflation back under control? That's from David Whitehouse of the Africa Report. Simon?
Sorry, my apologies. Thanks for the question. So first of all, I think it's important to note that interest rate policy, central bank policy, has become a bit more orthodox in the past year or so. So if you look, for example, at the yields on T-bills, and that's the key sort of market rate, those have moved up. 2 years ago, end of 2020, those rates were close to zero. So it's a vast improvement that those yields have moved up in the past, so let's say 18 months. And that's really what's needed to get inflation under control. Now, some of the FX problem is already showing up in inflation. So I think the sort of inflation you're seeing, sort of 20% plus, is reflecting the use of parallel exchange rates. That will continue. Realistically, if we see a proper unification of exchange rates, and Temi mentioned that in his presentation as a key item on the to-do list for any future government, you're going to need to see rates above 20%, and that may have to last for some time. But also, it's not just about rates; it's about restoring credibility in the public finances. If you can get that tax rate up, for example, that tax take in GDP, if you can wrestle with the subsidy issue, then you don't have to keep rates as high for as long.
Thank you, Simon. I think your answer sort of takes into consideration the next question. One of our guests also asked about a few things that you think Nigeria can do to attract more foreign capital inflows and all of that. I've got Amma Yusufran, who is asking, thank you very much for the presentation. As you mentioned about the repatriation trades, and the foreign participation. Please also inform us about foreign ownership in the NGX and the source companies. Timmy, would you speak to that very briefly for a second?
Okay, I'm happy to, and then I'll invite my colleague Jude Chiemeka, who's the head of our capital markets, to also maybe say a comment or two. But generally, the repatriation trade is because we have this dual listed stocks on our exchange. And so for those investors who are looking sometimes for an access to repatriate capital where the FX is not necessarily available, the capital markets do offer you that opportunity. So that's really the driver of that. Quite a few dual listed stocks are on the exchange. As to the ownership of foreign companies in our markets, really there are two ways that one has to view that. There are those strategic foreign investors. So that's where a lot of your multinationals will come into, and they also sort of qualify as foreign investors on our lens. Then, of course, you've got the more sort of portfolio investor type of capital and investors. And those are the data that I had presented earlier. At some point in 2022, it was as low as 5% of these foreign investors. It's ticked up marginally. But it is nowhere near where it used to be historically. And that's the figure also that we speak to, that we hope that once the macro picture picks up, that willingness should be there. And then people need to market and sell that Nigeria story back to them. So Jude, I don't know if you're there very quickly to maybe add a comment or two to that question as well. Thank you.
All right, thanks, Timmy. I think you really addressed the key issue there. It's really around the classification of our investor base. Traditionally, it's always been 50-50, but in the last year or so, it's been down now to 1486, so we have 14% international. But we're quite hopeful that as the new political landscape emerges, there will be comments or conversation around the macro, and that will really force liquidity to improve in our market, as we have seen in the past. Thank you.
Thank you so much, Jude. May I yield the floor very quickly to the Group CEO of the Nigerian Exchange Group, Mr. Oscar Oyema, if he has any interventions to make for a minute or so, very quickly. If there's any intervention, kindly indicate. Akato Mukuru, also from EFG Hermes, you want to add a few things to what Simon said about the Nigeria. So what further things Nigeria need to do to attract capital inflows? Are there things you're looking at? A few points more.
Yeah, I mean, thank you for allowing us the pleasure to participate. It's really an honor. I think the election is a key catalyst for Nigeria. I'm also very, very excited, not just for Nigeria, actually. It could be a key catalyst for Africa. Another transition of government, which would be smooth, very strong turnouts from the youth. That would be great to see the demographic dividend paying out and to see the youth collectively acting together to decide the political direction of Nigeria. Whichever the outcome, it really doesn't matter. I think the fact that that there is a possibility of having possibly the freest and fairest election Nigeria has ever seen. And if we have that alongside a strong turnout that gives the new government a very strong mandate on the macro side, I think it's going to be super exciting. I think that's the one big catalyst that I see coming for us in the next month. And like Simon said, it's not just about rates. You're not going to fix inflation only in rates. It has to be a holistic fix. We need to unify policy, macro fiscal policy with monetary policy. Everything needs to be pointing in a singular direction. And the best way to do that, I believe, is an election. So I like Temi. I'm super excited about the year. And I think it's going to be a landmark year for Nigeria, and hopefully the beginning of a renaissance of bringing back foreign investors to Africa, which is well needed.
Thank you, Kato. We appreciate that intervention. Timmy, just a few more points for you just before we round it off and ask Jude Chiemeka to give us a vote of thanks. What's the current mandate of market makers? One of Joseph Olusegun wants to know, as far as the market makers concerned, you mentioned that.
Yes, absolutely. Actually, Jude will be best placed to also address that. We have done.
Right.
is that historically, we all know what market makers are. This was launched a few years ago. Part of the challenge that we've had with that program really has boiled down to two things. The first is capital. For you to effectively make markets, you need a very strong war chest of capital. And some of our intermediaries have struggled to attract the necessary and the right level of capital. Now, of course, with capital comes everything around risk management that needs to go with that, just to make sure that people are protected. And that's been one challenge that we have seen. The other bit, of course, is back to incentives. And this is the bit that we have tried to solve. Judah, speak to that very quickly. For you to make markets and to take all of that risk and to devote all of that resource to it, then it'd be nice for you to have some incentives, tied to that. And there are a few things that we took to the regulator, got approved, and also are then looking to execute in what I would call a phase 2 of our market maker initiative. Jude, if you want to add a couple comments to that as well. Thank you.
All right, great, Sammy. So the new reform market making platform that we have now has taken away the fees associated with trading. So there's a commercial incentive that will allow not just the market makers, but also the companies that they make markets in to be able to create the sort of liquidity that is required. In the past, we had the CSCS fees as well as the SEC fees. Preciously, the SEC has agreed and those fees have now been removed. And so the market makers are now able to make a market purely on a commercial incentive and create liquidity in the market. We have about 8 trading license holders in the market now that are making markets, and are making markets now in stocks that are across the different segments of the market. Almost about 16 companies have market makers for their securities, or like in the past where the basket of stocks that the market makers had to work with, there were some illiquid traditional stocks in those baskets that made it almost impossible for them to make markets in those companies. But with what we have done now, we have seen an improvement in the value of trades that the market makers are doing. And I believe that as the market continues to evolve, the dynamics of trading, especially around the settlement cycle, will improve the liquidity in the market making space. Thank you.
Thank you, Jude. Bosin, if you'd be kind enough, if we can.
Okay, thank you.
If we can still a couple of minutes, I've just looked through many of the questions there, and there are 2 that appear to continue to recur. If I can just address them very quickly. One is around digital assets. I'm seeing a lot of questions around blockchain, around digital assets, tokenization by NGX. We do have very big ambitions there. Many people will be aware that our apex regulator, the SEC, did release some rules that would govern trading and origination of digital assets. We are engaging them, all right, and we're looking very firmly to position ourselves in that space. What would be the ideal dream for us, for example, in NGX, and where do we see the opportunity? It comes back to this young demography that we speak about. When we look at our markets today, it is missing what I call the underbelly of the Nigerian sort of population. That 25, to 35, 40-year age range is missing from our markets. What language do they speak? It's technology, it's digital assets. And how do we then, sort of craft capital market products from our traditional ways into more digital assets? So, for example, we see a world where you could, for example, rather than do a REITs, all right, do a securitized land through a digital asset. So I think the point there is that we are working right behind our regulator on that and working hand in hand with them. The other point I see a lot of questions around is back to retail. What are we doing around financial inclusion? What are we doing around investor education? There's quite a lot that we are doing there. It's a very big problem to solve. One thing we think we will come to the market with this year is even just a simple product around USSD. If I'm an investor or not, I have a mobile phone. Can I, on that device, get access to closing prices, for example, of a security? We think that that drives a bit of that. Lots of partnership with schools, with some of our stakeholders like CIS, like ASHON, like the SEC, who also have strategic ambitions in that regard. And then finally, of course, back to a margin. When we can unlock the margin problem, then you would see retail investors really come back to this market. Thank you very much.
Okay, thank you so much, Timmy and everyone. But just, I'm going to ask you to indulge me just the final point. The biggest event for me across Africa last year was the AELP, which is the Africa Exchange Linkage Project. And I want us to highlight that very quickly as a closing point, in which now we have about 7 exchanges across Africa in which you can trade. And you have some Nigerian stockbroking firms who are also part of this project. Timmy, I want you to please broaden this a little bit, because we're talking about intra-Africa trade of goods, but what about intra-Africa trade of equities as well, and every other products we have on our markets? I think this will also unlock a whole lot more inflows from outside if folks understand that they can buy not just MTN Nigeria, but they can buy MTN Ghana right now. They can buy MTN any other exchanges, and Safaricom in Kenya, and they can buy shares across the markets in Egypt as well on the EGX. So I want you to please broaden that for everyone to know who is involved in this in Nigeria. How can it be done? Thank you.
Thank you very much, Bosin. It's a very good question. I think let me step back very quickly and speak about this subject of intra-Africa trade. There are 2 things that need to happen. The first is the integration or the connection of these markets where they can speak to one another. This is what the AELP has done, across the continent. This call it almost physical-like integration of exchanges and their CSDs. So they're all speaking to each other. There's a data exchange and all of that. There's another way you can do that, which we're also seeing. Independent, perhaps technology providers, for example, independent brokers like maybe EFG and others, who may also just have, sort of spread across the continents, and they're able to make that connection. So what we've seen, whether it's with AELP or with, interested technology providers or some of our intermediaries, is that connection now has happened. Now, the second thing that needs to be solved then is that now that you can connect them, how do you actually settle those trades? Now that I can buy shares sitting in Nigeria, MTN Ghana, I'm in Naira, MTN Ghana is trading in CDs. How do you actually then do that settlement? That's the big piece that needs to be unlocked. And so that's a big currency-like conversation. And that's where this Afrexim and PAPS discussion comes in. Afrexim, as you are aware, launched PAPS as a trade-related way to address this subject of currencies, all right? A trader in Lagos trying to do business in Ghana, how do you solve that FX issue so that you're not converting currencies? What we are looking to do is to then position the capital markets right into PAPS as well. And we're looking to do this across the continent. Where you would start from first is those countries that are already on the PAPS network today. It's not all the countries in the continents that are, and some announcements you will see out of us over the next few days would sort of look to solidify this. And it's important to say that we're working, with, the Association of African Exchanges, with the SEC, with WACMIC. It's a very big initiative. So as to which brokers are on there, I want to out of fear of not selling some brokers here, that information is widely available. Perhaps, firms like AfriInvest are very, very connected on some of these traditional broker routes. We've got 7, 8 firms who are connected through the AELP. All of that information we have readily available. But I think that it's one of those that over time, once the continent starts to open up to trade, once the continents are more investable, many countries have some structural challenges now. This is one of those medium-term efforts that, someday you would find listings across, these exchanges with capital from different markets chasing it, for example, or to dip in trading. Thank you.
Thank you so much, Temi Pokuala. We really appreciate your those points that you've made in clarifying the road ahead and sharing with us information about where the road we've traveled last year. Thank you so much, everyone. But let me say a very big thank you to Simon Kitchen for that, the Managing Director at EFG Hermes Research, for that robust presentation. Thank you, Kato Mukuru, and the rest of your team at EFG Hermes. Let me hand over to Jude Chemeka, who is the Divisional Head, Capital Markets and the NGX, to give us a few words of closing remarks. Jude.
All right, thank you very much, Bosin. Good afternoon, distinguished ladies and gentlemen. Let me start by just thanking our guest speaker, Simon Kitchen, Managing Director, Head of Strategy, EFG Hermes Research, for the various insights provided during his presentation. At NGX, we continue to providing increased market access through the major drive to invigorate the retail segments of the market and enhance order flow. We do have many interactive touch points through which we can be reached, our website, X data portal, and the likes. We will continue to support the growth of Nigeria's SMEs through access to capital markets. We now have an early program where these SMEs can be properly incubated in readiness for accessing public funds, even as we continue to provide bespoke market services and solutions to these companies. Just like the CEOs mentioned, product development will continue to be at the heart of NGX strategic pursuits. And as we deploy innovative solutions based on emerging technologies such as blockchain and digital assets, the new technology board will provide a platform to democratize emerging opportunities in the tech space, both for the companies and the qualified investors, as we continue to increase the value and global visibility of the NGX brand. Finally, we will continue to expand the scope and reach of our X Academy, our knowledge portal, through partnerships, corporate collaborations, and digitalization. I therefore implore you all to take advantage of this platform to gain the required knowledge and skills to maximize your investments in the Nigerian capital market. I would like to thank all our participants from various geographies who have joined. I will truly delighted you were able to join us today, and I trust that you found the session very rewarding. We will certainly respond to all the other questions in the Q&A chat. And also would like to thank my colleagues and everyone that contributed to put this event together. Thank you all and enjoy the rest of your day. Thanks, Bosin.
Yeah, thank you so much, Jude Chiebeke, Divisional Head of Capital Markets at NGX. Thank you so much. And once again, let me have the pleasure of saying thank you to more than 700 participants who are part of this presentation today by the Nigerian Exchange Limited. We thank you very much, all the members of the board of Nigerian Exchange Limited, members of the board, as well as top executives and management team. Thank you very much. And special thanks once again to Simon Kitchen, to you and the rest of your team at EFG Hermes. We appreciate that, and we hope to see more of you in the market. Thank you very much, Okato, and everyone else. Thank you so much for everyone. We'll be sharing the presentations by both Temi and Simon via your email. I've seen a few requests on that already. Thank you so much for this briefing. I'll see you next time, everyone. Have a great day. And bye for now.
Thank you.
Thank you. Thank you, Jude. Well done, everyone.
Thank you.
Well done, everyone. Thank you, Clifford. Thank you, everyone.